All right. So, in the income statement, straight line method is being used, financial reporting. So, in the income statement, we are going to use straight line method of depreciation. And in the tax statement, we are going to use accelerated depreciation. Okay. So, the depreciation generally in the straight line method of depreciation, the in the early years उन्होंने clarify नहीं किया था, in the early years ये mention करना चाहिए था, तो ये question was not complete. So अगर ऐसा कुछ question आया जैसे यहाँ पे उन्होंने mention नहीं किया है, तो probably you will get a benefit of doubt. So in the early years was an important word. So in the early years, the depreciation in a straight line method is lower as compared to the depreciation in the tax state. I mean, in the double declining method. So in the tax, you are using double declining balance. So over there, the depreciation will be higher in the early years, and in the straight line method, the depreciation will be lower. तो इसको जरा मैं ये करता हूँ, 400 कर लेता हूँ. तो उसके बाद क्या करेंगे हम लोग? लेट्स अज्यूम सर्टेन लेवल ऑफ सेल्स, 1000 पकड़ लो सेल्स. सो सेल्स माइनस एक्सपेंसेस ऑन द इनकम स्टेटमेंट. कोई मुझे चाहिए हेल्प करने के लिए? रेज हैंड इफ यू कैन हेल्प मी आउट. अनुष्का, Bhakti, anyone quickly? Tanvir? Yeah, what is sales minus in expense called as in the income statement? बोलो बेटा.
Sales, uh, operating profit, gross profit margin.
Profit before tax 900.
Tax
Assume करो tax is 30%, so that becomes 270. What is the name of that? Income tax expense.
expense.
And in the tax statement, instead of profit before tax, we call it taxable income. And instead of income tax expense, we call it tax payable. So in the income statement, it's PBT, profit before tax and income tax expense. And in the tax statement, it is taxable income and tax payable. 1000 minus 400 is 600. 600 का 30% is 180. And now comes the important point. We tell to the government that as per our calculations, tax is coming to 270. But you are asking us to pay 180. So okay, we will pay 180. But what about the 90? Because our calculation is going 270. You are saying pay 180, so we'll pay 180. But what about the remaining 90? Yeah, Tanvir, what about the remaining 90?
It will be added, like remaining 90 we'll have to pay it later on.
That means you will be liable to pay that in the future. It will create a deferred tax liability of 90. So as per income statement, the tax is coming to 270, but as per tax statement is only 180. That means the government says pay 180 now and you are liable to pay the 90 in the future. So deferred tax liability will be created. So over here, clearly it was basically a temporary difference because it was getting a deferred tax liability. It was not a permanent difference, and we were asking for least likely, and hence the answer was A. And you can see over here, income tax expense 270 is greater than 180. So income tax expense greater than the tax payable. Income tax expense 270, tax payable 180. So C was right. It was a temporary difference. Deferred tax liability was created. It wasn't a permanent difference. A was wrong statement. So A was the answer. So this was an easy question. Raise hand if you have any doubts. No doubts? All right.